back with the face cam. For now, let's do this trade recap. What happened on today's trading day? I'll also recap yesterday's trading day. Although we did not take a trade, I'll just recap what happened on it. The current date today is Thursday, November 21st, 2024. Yesterday was Wednesday, November 15th, November 20th, 2024. How did I even get 15? Okay. But we'll start with today. So what happened today? Why did Lonnie end up executing today? And how can we go further improve our trading and everything of the sort? If I bring this right here, let's bring down the Forex Factory. What happened today? Well, today we had UP's unemployment claims and Philly Manufacturing Index, as well as existing home sales. These two are completely useless, although we keep referring back to this every single time. Every single time I will continue to refer back to this, that being my probable trade factors. No news trading days, no news Mondays, ISM news data days, and 8:30 a.m. high impact news days. All we're focusing is on the high probability trades. That's it. Nothing more than that, nothing less, right? High probability market conditions in order to take higher probable trades. We don't need that anymore. Looking at the chart, where we will continue to stay unless we actually showcase yesterday's news. This week, our trade bias has been on the dot. I remember a week and a half ago, I was really struggling with my daily bias, understanding draws on liquidity, understanding where we will go on the day, how to react to price action when it does something certain, how to go from bullish to bearish in a proper way and not have my bias mixed up or not overthink my bias, and playing into arguments rather than just letting my mind do guesswork. Today, we didn't focus on writing out the arguments. Recently, we have been. If I've said we're not going to use TradeZella anymore, but we are. If I go back to our daily journal and we go right here, view note, scroll down, you can see right here we have been writing out both bullish and bearish arguments on the chart in order to determine which side is more probable than the other right here. But today it was pretty clear, and I'll explain how I got my bias right now. I ended up having a bearish bias on the trading day, especially market open upon this liquidation to the downside. How did Lonnie get this? Well, starting off on the daily time frame, let's hide all the drawings. We were making the push to the downside, although we weren't making a push to the upside. So originally I was bullish before I became bearish until I analyzed this one simple thing. By me analyzing this one thing, it shifted my whole perspective on what price action could do. Making that push to the upside, we were beginning to invalidate this bullish daily PD array, fair value gap, in simple terms. And I was like, okay, well, guess what? We have potential to continue higher. Until I scaled down to the 4 hour, didn't see anything. At the moment, I seen a small 4 hour fair value gap right here. If I unhide the chart, you will see I did mark it out. I also marked out some unmitigated PD arrays we have not yet retraced for that could be probability in order to continue lower. You always want to analyze both sides of the market, hear both arguments before you make a sound judgment, right? Now scaling down to the 1 hour, this is what got me. We also had a 1 hour fair value gap, but it wasn't that. It was the sweep of liquidity. Now you may have asked the same question like me before. Well, Lonnie, how are you able to determine the sweep before it even happens? This is something I discovered very recently. Unfortunately, I cannot yet link it because I'm not done with it. But this right here, liquidity sweep versus a run on liquidity. We have to be able to understand what is a run on liquidity. A run on liquidity is when we continue past our targeted draw on liquidity. So, for example, right here, we would have continued higher closing above this high right here with significant enough displacement in order to have respected it, giving that confluence that we would continue higher. Same thing vice versa, showcasing the disrespect of this, the wick, or the failure to displace with strength, would showcase obviously the lack of respect, resulting in the confluence that this has the potential in order to continue lower, being and resulting in a liquidity sweep. That was something that we definitely noticed immediately upon opening the chart. It was the hourly close. Yes, we were pushing to the upside, but it was that specific hourly close that if we go right here, if we go right here, we marked it out, saying that, hey, we didn't have a significant enough run on liquidity, or we didn't have a significant enough displacement in order for this to be a full run on liquidity. There is potential in order for us to liquidate back to the downside after making a retracement. That is exactly what we did. I didn't even get to fully write out my thought process because of how quickly it happened. It happened in a matter of minutes. Market open, swept it out. And I was like, okay, cool, we're bearish. That's what gave me my bearish confluence. If you are not actively learning the differences between the run on liquidity and the sweep on liquidity, you have to. The reason being, why do you have to? Because we want to be able to understand beforehand when things happen. You don't want to analyze the liquidity sweep while the liquidity sweep is happening. You want to be able to analyze and anticipate it beforehand so you can prepare and either take advantage of it or prepare and mitigate your risk, right? So, going back to it, what else happened? On the 15-minute time frame, showed a very, very, very strong displacement to the downside. That's very clear. Began to invalidate all of these bullish PD arrays. Cool. Back to the chart. That exact thing happened. Well, how did Lonnie get his trade entry? Going down to the 15-minute time frame, continued lower. Cool. Acknowledge that. Ended up forming a 15-minute fair value gap, but we knew we wouldn't see a retracement for that. What we actually wanted to see the retracement for was the equilibrium of this new range we had formed to the downside. We had showcased a clear sharp turn model, creating new bearish PD arrays, invalidating the bullish premium PD arrays. Now, upon seeing the retracement, I originally thought we could retrace for this 5-minute fair value gap above discount. Then I marked out the discount properly, and I realized, hey, this right here is discount. We're retracing for discount as of right now. What do I want to see? Well, what does Lonnie always look for when looking for extra confluence? Well, he looks for a new PD array being formed, a new fair value gap being formed off of the prior fair value gap. This is just sauce right here. This has saved me from so many losses, so many wins. Although I am going to go and do some research on my trading rules. Upon my trading entries, we've been correct about bias and have had multiple understandings of price action within the past recent days. If I wanted, I could have traded every single day today. I could have pressed buy, or sell, buy, blah, 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 whatever, right? But I didn't get my specific retracement entry. That's something I'm going to go in and research. Just felt like saying it. Anyways, formed a new PD array off of the one that got validated. That gave me my confluence. I was like, okay, cool, we're good to go. Marked out the equilibrium again. This was a perfect equilibrium entry. Now, let's read I say now a lot, but I say now because Now, let's read my trade captions. Upon entering this, you could see it was perfect retracement. I wrote, this trade is already a loss. Why did Lonnie write this? Going to my TradeZella. When we got the retracement, this is how price action was looking. It looked like a reversal in that moment. We've invalidated that 5-minute fair value gap and began to form 1-minute fair value gaps, 1-minute PD arrays. That looked like a sharp turn model on the lower time frame. So I pinpointed or I acknowledge that this is a potential reversal, although I will keep my limit open because I want to see how price action reacts to this PD array and how we continue to develop following within the bearish market structure of the liquidity sweep. I still like what I see. Bearish arguments are still in play more than bullish as of right now. That's exactly what happened. Price action made that reversal, came up. Now, when I wrote this trade is already a loss, I already wrote right here the invalidation of this PD array would be more than a bearish trade retracement. It would be the beginning of the invalidation of the 5-minute PD array, resulting in bullish confluence again. When I wrote this trade is already a loss, I was acknowledging the fact on the 1-minute time frame how we were closing within this 5-minute fair value gap. We were having strong bullish displacement to the upside rather than more so rejection of the wicks, of the showcase through wicks. That to me began to showcase bullish confluence. So I wrote this trade is already a loss. I find myself having really, really good trade psychology in losing conditions, and in winning conditions being a little more why? Because I haven't won enough in order to become desensitized to winners. That doesn't mean I'm emotional to them, but I tend to analyze a little bit more. Not like a crazy amount. There's only so much you could do. It's really just pressing buttons and waiting for price action to play out. But I'm very desensitized from losing trades. I'm able to acknowledge them immediately and I'm able to move on. It's to me the reversal. Some people are unable to move on from losing trades. I'm so easy able to move on from losing trades, and I love to analyze the winners more and understand them. What happened then? Price action ended up giving us another sharp turn model back to the downside on the 1-minute time frame, invalidating this bullish PD array and beginning to form bearish ones. Like what we've seen, price action continued lower and lower and lower. Our take profit was right here at our drawn liquidity, which were these hourly lows right here. Originally used these as the drawn liquidity before that huge sweep to the downside, which we didn't get a retracement for in the 1 minute. Unfortunately, if we would have, I would have been in right here. So our target was 477. Price made the push to the downside, almost hit it, came back up, retraced for this 5-minute PD array, began to look like it was about to validate it and continue lower, hitting our take profit. It didn't do it. That was completely fine. Price actually showed bullish confluence back to the upside. At this point, my stop loss was in profits. We were gradually trailing it. Originally, it was here to here to here, then to here. Why did Lonnie not place a stop loss above the high? I don't want a 100-point stop. My point stop already with an 80-point stop was already a lot. This was the most validating point in price action above the high to where I could be like, if I would have gotten stopped out, it would have been above what? The 1 minute final PD array we could validate, right? This is the final point of price action we could validate. So that to me was just like, okay, cool. If we surpass that, trade idea is over. And gradually trailed it from there. If I wanted, I could have even had it right here, had a tighter risk reward, but our risk was managed. Price action made push to the downside, trailed it, eventually trailed it here, keeping it there. Finally, I could have trailed it right above here, securing in a solid profit on the day, but that's something I could go in and do more research on, right? We're always refining, we're always learning, we're always improving. Price action stopped me out in a bit of profit, and now doing what it's doing. Gonna do another recap on this trade at the end of the trading day in order to determine what could have went wrong and what could have, gone a little bit better. Whether we will push back to the downside. If we continue back to the upside, then there is no recap, extra recap, and this is it. So yeah, invalidation of bearish PD array, possible reversal if showcase of sharp turn. That was right here. And we ended up getting that sharp turn model back to the upside, giving us a confluence, which we could have just manually exited the trade right around here, but it doesn't matter. It's not about the profit, it's not about the loss. Always remember that we're here to learn, we're here to improve, and that's all it is. This trade and all the other ones we will take and all the ones we have taken before is a build-up of what we have learned and us putting probabilities together, nothing more than that. Every loss we've taken, every win we have taken has been in probable market conditions and will continue to be so unless we see opportunity in improbable market conditions, right? But anyways, hope you all were able to get something from this. I may make a video about runs on liquidity and sweeps on liquidity. If you guys want that, comment below. If not, I'll make it anyways because I could care less. So, love you guys. Thanks for watching. Peace and have a nice day.